I was just saying in the chat room how I was watching Wanda Sykes do the Daily Show, and it reminds me of what a good show it is. It's a shame. Trevor Noah just really annoyed me. At first I liked him, but then it got like really tiresome because the show's all about him. Like it's all about him doing impressions and literally could not go one little snippet. You know how they change like news stories? Every news story had to be him doing an impression. It used to drive me nuts. So now Wanda Sykes is doing it, and she just does it like a professional person. You know, she reads the news and she makes the little jokes and she sneers or whatever, but she doesn't make the whole thing about her. You know, which is great. And the show's a funny show. They got great writers. Just got lost with the Trevor Noah show. Excuse me, shaking up my tea. By the way, I drink matcha tea, and what I do is I'm going to tell you a very important thing. I take matcha powder, which you can buy either in bulk or you can buy it in somebody makes them in little tubes like at the supermarket, and you buy 20 tubes at a time, and each tube makes a portion, right? But I take one tube and I push it and I drop it into a bottle of Fiji, and then I shake up the water, and then just shake up the water, and it makes matcha tea. So I take a nice cold bottle of Fiji, drop the matcha in it. I like that because you can take it anywhere, go on vacation, go on a plane, doesn't matter. You know, anytime I feel like having a green tea, I can do that. But the important thing about the matcha tea is it's got the most caffeine of all the green teas. And so I have it during one of these. I have it in my webinars because I like a little bit of a boost while I'm spending 2 hours talking. But also I recommended it to a friend of mine who was having like tiredness from long COVID. And he was like, holy shit. So there's no medical guarantees here, but he said it made a world of difference. He has been dragging from having tiredness after getting COVID, and he could not get out of this sort of like funk he'd been in as far as like just having energy and stuff. And he started drinking. He just drinks one of these a day in the morning to get himself up, and he says he's getting through like his day. And if he wants to go out at night, he just drinks another one, and he's good for the night. And matcha tea, actually, samurais used to drink matcha tea before going into battle because it has all the stimulation of like having a cup of coffee, except there's no like sort of super spike and super down. It just sort of gently elevates your overall awareness without the caffeine sort of effect. It's very good. So I want to say that while I'm thinking about it. I'm telling you, my friend was just like blown away. I mean, he's seen 25 doctors, and they were all like, well, hopefully it'll end at some point. And I said, hey, try this. And it like worked in a week. He was like, holy shit. Meanwhile, I finally get around to taking a sip after talking about it. Anyhow, plus I love the taste. Well, not everybody likes the taste, but I love it. But of course, I'm a green tea drinker from many, many years. But I never really got into the matcha tea, mostly because it always seemed like it's a darker green tea. You got to get used to the fact that it doesn't all dissolve, so you end up getting little lumps of tea in it, you know, tea powder. That's the other thing though, it comes in powder form, and so I make green tea from leaves, and so to me the matcha, which is always powdered, it always seems like fake tea to me. But then I learned, having a conversation with somebody in a Japanese restaurant, you know, the chef, I mean, and he was explaining to me how the matcha tea is the powder they scrape. It's effectively the strongest powder they scrape off the leaves of the tea. And it's actually, he says it's just instead of having the leaves and having the mass of leaf that goes with it, right? He said you're just having the stuff that you want in the first place, the thing you're trying to get off the leaf when you boil it in water. And he said for cold tea, it's way better. And he's right. It's like fantastic because I can instantly make myself a cold matcha tea, and it tastes great. So anyway, end of my commercial for tea, end of my commercial for the Daily Show. Now let's talk about the market. All right. Hey, and by the way, feel free to ask questions. That's what there's a question box for. So, you know, if anything comes up that you guys want to talk about, but otherwise I'm just going to ramble on and talk about what I feel like. Where are we? So we took a little dip, but it's not, we came back quickly. So none of this shit matters. It just, we started out here on Monday, right? And now we're back to where we started on Monday. So basically nothing has happened. All right, we're a little shy on the S&P, we're a little shy on the NASDAQ, but none of this is any tremendous damage. And, you know, that's why we have, where are we? That's why we have these charts and these ranges, right? Because it shows you in the bigger picture how little of these daily things matter. This is a weekly chart. And so we're making progress on a weekly basis, whether we pop that, you know, whether we test here and test there, the bottom line is progress, progress, progress. So on the whole, it's good. The real test is going to come when the 50, this is 50 week, it's basically the 200-day moving average. When that comes down, and we're going to basically be at around 14,000 when all this happens. This is going to come down, I mean 12,000. This is going to come down, that's going to go up, and eventually it'll consolidate here, and which way it comes out of that consolidation is going to be critical. That's going to be your critical tell, and that's going to take the entire earnings period before this is resolved. These are weeks, so 1, 2, 3 weeks ago, this thing went from here to here. So in 3 more weeks, this is a pretty steep incline, right? So in 3 more weeks, it's probably not even going to be back to the 12,000 line yet. Especially if we keep going up, then it might never get there. But at the moment, even if you assume it's going to keep coming down, it's going to take more than 3 weeks to come down. So we'll be fully through earnings period and post-Fed, which is next week. So we'll be digesting all this new information, and we will then, and we got the GDP tomorrow, in fact, is the GDP report. So we're going to have all this data, and we're going to know exactly what happened in 2022. We're going to have a lot of information for 2023, and then the NASDAQ's going to decide which way it's going to go, whether it's going to go up or down from this point of inflection that we're going to hit. So we shall see. You know, and I was talking about valuation this morning, and well, this is yesterday, not this morning. I was talking about valuation this morning, and you know, the NASDAQ is trickier than the S&P to value, but we feel that 12,000 is, just because 12,000 is a strong bounce line doesn't mean it's not where we think the value is. We think 4,000 on the S&P and 12,000 on the NASDAQ are the correct prices based on the performance that we saw last year and based on what we think is going to happen in 2023. But then from there, you can expect your range to be as low as, I don't think 10,000, I think as low as 11,000 and as high as maybe 13.5. That should be the range we trade in this year. So it depends how optimistic people are about such and such. So we got to watch the macros as well as the micros. And this morning I was talking about this stuff too. Huh. Oh, I see. That's, no, I don't see. Why is that gigantic like that? It's weird. I must have done something wrong this morning. Oh no, see, that chart should be under the beginning thing, right? And then it's not for some reason. Probably when I edited, I didn't fix something. I didn't even realize that. All right, anyhow. No, I chose this image. No, that's where it's supposed to be. This is supposed to be the first. This is above, but I don't think we're supposed to see the above chart because it's already in the post. I don't know. Anywho, what was I saying? Oh yeah. So anyway, so on the S&P, we actually have punched back over the 4,000 line. Again, I think the range should be, you know, in around this area. I think 4160 is not very much. It's only going to be, it's not even, I mean, 10% higher is 4,400. So, you know, we're talking about this is only about 5% higher, not even 5% higher. So that's a pretty tight range. But again, you got to see something impressive on the S&P to get us over that. So it'll be a stretch to get to the strong bounce. It's a much, much tighter range than the NASDAQ has. Of course, the NASDAQ has a 50% up and down play in the bands. And here we only have a 10% up and down play. So, you know, it'll be a stretch for us to see the NASDAQ go here. That would be like the, I'm sorry, the S&P. That'd be like the NASDAQ getting to 13,200. So, you know, we're not really expecting that for either one of them. And we'll see what the numbers are actually like. You know, but here, this is good. If we stay above the red line here, which is the 200-day, the daily chart, 200-day moving average, then that's going to pull the 50-day moving average above, which is the opposite of a death cross. That's a very bullish pattern. And that might make us hold over the 200-day moving average until it crosses over the 4,000 line, and then we can probably assume the 4,000 line won't break, and we're going to then we'll start consolidating up here. That would all be very nice as long as we hold it over the next short amount of time. It's only going to take, and again, you just look at what happened before. So how far do we have to go to cross? We got to go this much, and that's only the middle of the month, so 2 weeks. So basically in 2 weeks, if all goes well, if we don't drop back below this red line, we should cross back over the 200-day moving average, which will probably give us a nice booster. It should anyway. So it's going to take 2 weeks of good earnings reports, basically. And I talked about just generally how you got to watch these patterns and see what's going on. But you see what I mean? It's like I was saying, it's kind of like a river and watching a leaf in a river. I mean, here's your river, and it bends and curves and does this and that. So that's a pattern. There's a broader pattern that says generally, you know, if you look at a stream, or if you ever go rapids riding, right? You go rapids riding, you see the river is heading south, and so you have a general idea that you're going to be heading south. But while you're heading south, you can go, you know, left and right and up and down and blah 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 blah. But the river runs south. It's going to keep going that way. That's what this is. When you look at the wider convergence lines, like if we look at here, oh, this doesn't have the little lines. That's a shame. What's that? Oh, it doesn't have it. IBM. None of these do. Why is that? I don't know what kind of coding you need to do. Anyway, so there are these. Sometimes there are these trend lines that this thing draws. Not on this chart, apparently. No, I guess it's a yearly chart, doesn't do that. I don't know how to get the annual chart up. Oh, I know. If I go to PhilStockWorld and I find a chart, not that. Let's see if we can find a chart with lines. Nope, no luck. Yes, aha. Oh, open that in a new tab. Where are we? Did it do it? That's funny. I just told it to open in a new tab and it ignored me, or did it? Oh, there it is. Oh, I see, because I downloaded that image, so it's not dynamic. Okay. Anyway, so there are these. See these trend lines? That's what I mean by when I say the river's heading south, or it looks like north in this case. But the river's heading south. There are these trend lines that are large that you can say, well, it's going in that general direction, but I don't know where in that general direction. And the river just goes up and down and winds and curves and turns and whatever. And that's the river, though. But that doesn't mean, then you look at a leaf in the river and that's going to go zigzag, zigzag, zigzag around. So when you look at the channel for the S&P 500, that's going to give you a range, and then your stock is going to also go inside of that range, but unlikely to break out unless it does something particularly strange, like have spectacular earnings or something spectacularly bad happens. But generally, it's also going to follow along. So if the S&P is up 10%, your stock may be up and down 10% within that range, but it's still going to be generally have a push to go up 10% because it's following the current of the rest of the stocks in the index. There's reasons for that, mostly caused by ETF buyers, because people buy ETFs. The ETFs are indexed. All the stocks of the ETF are indexed, and therefore, when somebody buys one stock, they're buying them all. This is why I don't like ETFs, right? Because you're buying the junk along with the good stuff. Why should I do that? I'm smart enough to look at an ETF and pick out the best stocks in the ETF. I don't need to have somebody assemble it for me. And frankly, you're not even having somebody intelligently assemble it. An ETF is by its nature non-intelligent. It's just basically you're taking an entire index and betting on it, and it's betting on all the stocks in the index proportionally. That makes no sense. Okay, it's just it's if you want to assemble a team of great baseball players, you don't say I need this whole team. Maybe you take the 27 Yankees or something. But realistically, if you go to the major leagues today and you say I want to assemble a team, you're going to pick individual players from each team to make an all-star team. You're not going to pick a whole team and stick with that. You can do better. That's why they have an all-star game, right? You can do better picking your all-stars. So, and those all-stars will kick the crap out of a normal team because they are the best players from all those teams. So not only are you taking the player, but you're depriving the other team of the player that you just took. So when you're not depriving the ETF, but when you take the best stock out of an ETF and you leave the rest of the trash, you should outperform the ETF, right? There's always an outperformer. Now, you could be wrong, and that's where the problem comes in. But if you are pretty good at picking, which we are, then there's no sense in going with somebody else's completely random crap. So yeah, you look at an ETF and you say, who are the undervalued performers in this ETF? And by the way, we have it's right there. Here's our watch list. Let me refresh that. So, we look at the watch list to figure out who is still cheap if the market is taking off. So the market's gone up a bit. Who hasn't really come up so much? Now, most of these picks are from November when we started, but the amounts are from whenever I got around to reviewing them. And I made a comment based on where we are now. So these guys are up already. They're up 5% from where we started. Allstate 136 is now 128. So Allstate got cheaper, which is what we want. The reason they're on our watch list is because I didn't want to buy them at 136. I want to buy them if they get cheaper. And so what I'm saying about these stocks, and again, don't forget we have a portfolio. We have a portfolio with let me see, long-term portfolio. Long-term portfolio. So in the long-term portfolio, we have 45 spreads. We got that. These are short puts. We're not going to worry about that. We have 45, 46 stocks that we've already got in the long-term portfolio. And the watch list is another 100 that we'd like to buy if they were cheaper. So if I thought they were so compellingly cheap that I had to buy them, we would have already bought them in the long-term portfolio. I wasn't shy about buying things for the long-term portfolio. We just purged it in November to cut it down to 45 stocks. So these are the remaining. Anything that got kicked off the long-term portfolio is now on the watch list. So in other words, in the watch list in November, anything we thought had played out. So in other words, if there was a stock that we had already made money on that we felt was getting a little bit higher in the range and had less upside potential, we killed it. We went back to cash. I don't want to have stocks that have already made 70% of their projected gains and then wait 2 years to make another 30%. That's silly. Also, we're coming into what I thought was going to be a scary market, and so far it has been. And so we purged about half of the positions in the long-term in all of our portfolios. We purged about half our total positions, but all of those purged positions went on the watch list. But that doesn't mean if it's on the watch list, I immediately want to buy it. I just sold these things. So when we sold Allstate, it was 136, or I'm sorry, well, it was probably about 136 because one of the first ones they did on the watch list. So Allstate was up around here when we got rid of it, and now it's 128. But 128 isn't the compelling thing. We bought it for 90. We were in Allstate for a long time, so we were in at 90. We got out at 136. That doesn't mean we're going to jump in at 128. You got to keep your head straight for these things. That's why we use the 2-year charts also, because it's like you got to really think about what you're doing here. So when we're looking to buy something, it's not because it comes back from some silly high that it never should have been at in the first place. It's because it comes back to a low it never should have been at. And then we say, oh, it's there again. But like I said, these are all stocks that I've already decided I like. So unless something monumentally bad changes in the stock, I'm probably going to want it more the cheaper it gets. And so very simply, we just look at these and say, well, who's still available at a good price? So Apollo, I'll go with these. None of these are exciting so far because they're all on an uptrend. So we missed it. Big deal. There'll be others. Here's Barclays. Here's Big Lots. Now Big Lots is nice and cheap, but they were nice and cheap in November. We kind of gave up on Big Lots. They're expecting to lose $200 million in 2023. I said, so it's risky and they have debt. So they'll have to dilute to borrow more and pay crazy rates. So no hurry on this one. Is basically, that's a very easy conclusion to make. That's a well-written conclusion. That's a good summary for the state of Barclays at the moment. Booking just got downgraded today. Apparently not bothering too much, but they just got a downgrade. And so again, we're certainly not chasing it. And again, don't forget, we picked this in November. It was 2,000 when we picked it. It's now 24. It's up 20% since we picked it. So we're certainly not going to be chasing that one. These guys are a good price right now. So this is one I would pick up if I was looking for something. BNTX also the worry here is that they made their money with the COVID. We don't know what their post-COVID outlook is, so we wanted to wait for earnings to see what they look like. Here's Berkshire. We just added them somewhere. BXMT. I like these guys still. That's still a good price. Boyd, not so much. Citibank, still a good price. And we just got past earnings, so the uncertainty of earnings is off. So it was 44.40, and now it's 51. So it's jumped up quite a bit, but that was 7 times earnings. It's still cheap. It was ridiculously cheap. Now it's just cheap. Cheesecake Factory just got downgraded. I like these guys too, but I want to see what their earnings look like. Caterpillar, oh God, really took off since we looked at it. 160, 243. Oh, it's 243 is 126 billion. Now 160. If it drops, we want it. Capital One just had disappointing earnings, but they're up anyway. So I mean, what can you do? CIM, one of my favorite dividend payers, absolutely want that. Comcast hasn't really gone up too much. CVX way too high. Delta took off too much. Disney also is a good one. But again, what we really want is we want to see somebody miss earnings and come back down to 80. We want to see them miss and come back down to 80, and then we would want to get in, as long as obviously the miss wasn't for something that we think is a permanent damage. Dix has popped up already. Boy, all these things I picked are already, everything's up from where I picked it. eBay, ERJ, even Brazil's ETF is, that's Embraer. EW something is Brazil. They also have taken off a lot, but they're still also incredibly cheap. ET, incredible dividend stock, also a little high. Expedia, and again, we want to see at least one travel stock report before we start buying all the travel stocks. Federal Express, I'm concerned about Federal Express. I mean, the price of these things, I don't know. It's hard to imagine that they're not going to get knocked down a bit in a recession, because I mean, holy crap, are they charging a lot of money to ship things? Here's Ford, always underpriced, still underpriced. Future Fuels is another one I love. FL, they're good too. Fro took off too much, Frontline. GE took off too much. Gilead took off too much. Wow, a lot of these guys really popped. GNRC, haha, that's a good one. I like them. Google still cheap, but they got the lawsuit things holding them back right now, and but the Department of Justice is on their asses. But they'll resolve it some way that's going to make sense. Look, the worst case for them is they're going to have to spin off their search division, not their search division, sorry, their advertising division. Will have to create a separate entity. The entity will still do business with Google. It'll just have to do it at the same rate it does business with everybody else to make it fair. It's not going to hurt them. They're gonna spin it off. You're going to end up owning Google plus the advertising entity. They'll both make money. I mean, Microsoft just put $10 billion, putting $10 billion into buying Chat GDP, which is the OpenAI guys, to help them compete against Google, because every single thing they've tried to do with Bing and everything else has effectively failed. They have not been able to crack Google's code. So they've started bitching to the Department of Justice, and now they got, it's like a kid telling on another kid. They're like, they went to the Department of Justice, and they're saying the whole thing is unfair at this point because you can't beat Google, even though they're spending $10 billion to beat Google. But realistically, I've been using the Chat GDP for a month now because I really find it interesting. It's not going to, it's a long way away from being used properly because it's not designed to be a search engine. I mean, when you're doing a search and you want to say, in some ways it's good. Did I have it up? Let me see if I can go. Chat, openai.com. Yeah, I know that. Login. Obviously, my session's expired. It's occupied. I can't get back in. See, this is terrible. And you know what? They're going to start charging. They want to charge $48 a month for this thing. So that's. I don't know if I'm going to stay in for $48 a month, but it is fun. But anyway, the point is, it's very good at answering a question, or if you want to have it write something or summarize something, it's great for that. But how does that generate ad revenue? See, the whole point of Google is if I say to Google, what is the best SUV? That's how Google works, and it's ka-ching, sponsored, right? Sponsored. I'm not sure where the line is. I think here. Oh, I think here's where you finally get to the actual results that are what is the best SUV, where it comes to car and driver, consumer reports, right? Things you would actually want to see. Everything above here, though, is paid advertising to Google. So they get paid whatever 100th of a cent, but they get it 20, 30 times just the second I ask this question. And Google users, since it's free, are very accepting of the fact that they just basically have to, they know they got to scroll down and find the actual thing they want to find. But you're literally scrolling down a page or more. This is more than one full page that you have to scroll down just to get to the actual result that you asked for. Chat GDP just tells you. So Chat GDP would just basically give you this list. That does not generate any income at all. So Microsoft, it's not about just buying Chat GDP and then rolling it out as a search engine. Microsoft has to cripple Chat GDP and dumb it down and make it show you lots and lots of results that they can charge money for. Otherwise, what's the point? So this is why capitalism sucks. Because these guys wrote this thing, they really don't need much money to get it. These are people who developed this AI, and frankly, it's not an artificial intelligence. Believe me, I've talked to it enough to know. An artificial intelligence has got to be at least as smart as a 3-year-old, and that would mean it would have to be able to say, imagine a 3-year-old that knew the answer to everything, right? Except they would still ask at some point, why do you want to know that? Or how about I tell you this instead? Or don't you think this is a good idea? That never happens. That is not what these quote artificial intelligences do. They just answer the question. It's the same as Watson on Jeopardy 10 years ago at this point, right? Watson on Jeopardy. It just goes through its database and presents the most likely thing the most likely answer to your question is presented, that it feels has a 74% accuracy, that a 74% degree of certainty that it's answering your question the way you wanted it to be answered. And then it doesn't learn either. It doesn't get feedback at that point to know if it's doing better or not. See, a 3-year-old, you get feedback, right? You're like, no, that's not the correct answer. Try again. Answer it again. And then it would learn, and next time it would come back. This thing doesn't learn. It comes back next time and tells me the same wrong answer it told me last time. Not to mention that it has no idea whether it's presenting correct facts or not. There's a lot of times this thing will tell you something very authoritatively, but the sourcing for its authoritative answer is completely wrong. So this is not artificial intelligence. Google doesn't attempt to pretend it's artificial intelligence. It just says their algorithm goes by, it has presented these lists to many, many, many people, right? And of the people, they clicked on this one and this one and this one the most. That when someone asks this question, and you know that because when you're asking Google something like, who is, what's his name, Satoshi? Yeah. So in other words, I don't remember the guy's name, but I say, who is Satoshi? And he says, oh, Satoshi Nakamura. That's almost certainly what you're saying. There's a Satoshi in Pokemon. I didn't know that. There's some other Satoshi person, whatever. I don't, but again, Google is right. I care about the first one. That's what I meant when I asked that question. Then I click on it and it brings up a Wikipedia thing immediately. All right. It doesn't bring up as many ads because Satoshi Nakamura isn't a product. It's not something that people feel they can sell me. Although I would think it should bring up Bitcoin exchanges and things like that. So I think the people whoever markets Bitcoin should jump on this, right? Because there's no advertising here for Bitcoin or Bitcoin exchanges. And if I'm looking for this guy, obviously I'm interested in Bitcoin. So somebody's missing the mark on their marketing here. Anyway, but Google works by the most clicked upon thing. If somebody had asked it this question previously, the main thing that they have then done is clicking on the Wikipedia page for Satoshi Nakamura. Then it goes down here, Investopedia, Forbes, other authoritative links that it finds that say it. Here's more, and here's more, Rob Report, and it's all things saying, who is this guy? What do we know about him? So, and what OpenAI would do instead is OpenAI would basically tell me this. It would basically say something very similar to what the beginning of Wikipedia says. All right, and not that this is a fine line at this point. Not that it's stealing from Wikipedia, but Wikipedia is what? Wikipedia is the sum knowledge of many, many contributors that was considered by other people to be authoritative enough to become part of the article. So, Wikipedia is technically an encyclopedia that is created by committee. That's what Wikipedia is. I never understand the people who think Wikipedia is bad, because to me, it's one of the most pure forms of what the internet should be in the first place. It is exactly what it's supposed to be. It's a non-profit entity that has created this encyclopedia of knowledge based on the input from many, many people who are then fact-checked over time by many, many other people and there's a whole hierarchy of authority and so on and so forth of people that you have to prove your worth as a reviewer to be able to make a suggestion in something like this and to have your changes. But there are committees, and the committees look at your suggested changes, and if you suggest a change, then they will review it and decide whether it's valid or not, and they'll research it further. It's all just done by people who are interested in maintaining the community. It's freaking great. And they used to have an investment Wikipedia, but somebody killed it, which pissed me off. It was getting really good, and then they killed it. And that is not what an Investopedia is. That's a completely different thing. There was a Wikipedia for finance. I think it was called Wiki Finance. Anyway, so groupthink. The point is, the OpenAI would only come back with something like this, would say this, and whether it's right or not would be just depending on where it got its information from. So that doesn't make it better than Google. So just for Microsoft to just slap that down and say, oh, now we're better than Google, that ain't going to happen. So we are years away, two at least, from Microsoft rolling out a platform that's going to really challenge Google and make them money. That's the kind of part of the point, right? But that's why capitalism kills things, though, because as it stood, a normal group of people, let's say 4 or 5 guys got together and developed OpenAI, and it took them a few years, they would have been thrilled to get $100 million, right? They would have been thrilled to make $100 million off of this thing they rolled out. Instead, Microsoft comes along and offers $10 billion. And now, instead of them functioning like Wikipedia, which functions solely on donations from the users and is happy to get $10, $20 million a year in donations, now Microsoft must return $10 billion back into the company and make a profit from the same thing. And so therefore their model has to be effectively something that drains your wallet. Otherwise, it doesn't make sense. So they took something that was a perfectly useful tool that had already been developed, that was free to use, and they're turning it into something that requires $10 billion to be taken out of your pocket. That's messed up. There's no reason for that to have happened. It performs no value function in society, and it takes $10 billion away from other perfectly good things that you could have put your money into. And obviously you as a community of users. So this is extremely destructive, and this is what's actually going wrong with capitalism in the US and in other developed nations. This is a problem, is you're misallocating capital now, and it all goes to the rich, right? In other words, Microsoft is so rich that when you do like something, they will take it. If you like something that's free, they'll take it and turn it into something you pay for, because that's how they get richer. They have to find things that a lot of people are willing to pay for, even if they're not paying for it now. And that, by the way, not necessarily Microsoft, but big corporations, that includes air and water and electricity and gasoline and whatever your healthcare, your education, whatever they can find that they can cause you to squeeze money out of, they will begin to monopolize it and take over the resource and then charge you for it. This is why the Department of Justice is going to Google and saying, you know what? You guys are charging so much, you monopolize the advertising marketplace for online, and you're now squeezing all the money out of it and keeping the competition away so that it costs the consumers too much. That is what government is supposed to be doing. They're supposed to be watching stuff like that. But now, unfortunately, the conservatives act like any kind of regulation like that is some form of communism, unless it suits their purposes, of course. but in other words, they're saying any kind of regulation is like communism, and you should never get in the way of a business making money. And that's bullshit, because it's so harmful to us. You know, I'm right now, I'm drinking bottled water. I'm drinking water from Fiji because you can't get good tap water in Florida. You know, and in Jersey either. I started drinking bottled water in Jersey. When I lived in New York, never drank bottled water. The water's freaking great in New York. But again, that's because New York is one of those bullshit liberal democracies that thinks it's important to provide good, clean drinking water. Also, they're able to, because they get their water from upstate in the Hudson River Valley. They have these vast reservoirs, and they have 100 miles of a reservoir thing, like what was that movie? It was one of the Die Hards where they're driving trucks of gold through the reservoirs. Those reservoirs those pipelines are how New York gets all their water. aqueducts. That's what they're called. And you know, that's incredibly good free drinking water for everybody, and you get used to that when you're growing up, and then you feel deprived of it as things go by. Now, water is becoming a very scarce commodity, but again, it's mostly becoming a scarce commodity because we don't invest. The government doesn't invest money in providing good, free, clean drinking water to the people. It's not a priority. They let private business handle it. Private business handles it by monopolizing it and turning a profit and then squeezing you for more and more money. Because if they're a private company and they've taken over your water supply, then what happens to them quarter after quarter after quarter? Then the investors say, where's my profit? And not where's my profit the same as last year, where's my profit, where's my growth, where's my additional money? They've got to make more and more and more and more and more money every single quarter. And that means charging consumers more and more and more and more money every single quarter for something that used to be free. And you see it with everything. I mean, you see these municipalities and they turn over we're gonna turn over the garbage pickup to a private company. Isn't that it's gonna save the town a fortune? It's like, yeah, it's gonna save the town a fortune on the municipal budget, and they won't have to show it as a tax to you, but then instead it's going to now be a separate fee that you pay to this private company to pick up your trash, and they're going to charge more and more and more and more every quarter. You know, when have you ever had a service that got taken over by anything where they go to you, oh, we're a lot more efficient now, so we're going to cut costs by 30%, we're going to cut your prices by 30% now that we've taken over? That doesn't happen. Because the private company steps in and says, okay, they say to the town, we can provide this service for this much money. And the town says, great, do that. And they say, of course, we're going to need inflation increases and so on and so forth. So they come in, they do the service, they figure out ways to cut costs, often by providing a crappier service than you used to have, or giving you the least possible service for the most possible money under the contract that they have. And then they get their cost of living increases and so on and so forth that they've negotiated, whether or not they need them. They're going to constantly raise prices on a schedule to extract more money from the population of users. This is capitalism. This is the whole point of capitalism. This is what it's for. It's good for some things, for innovation and competition and so on and so forth, but it's very, very bad for your day-to-day life. Everything should not be capitalized, but it is. We have taken capitalism to such an extreme that there are very, very few things in our lives now that are not run by private companies. And that's very scary. And frankly, I mean, it includes obviously higher education. It includes preschools. So your preschool education is now run by private companies, and your college education is run by private companies. They have so far left middle school alone, but you know that that's going to be some bright idea by somebody. They want to privatize your social security system now too. There won't be many functions of government left that aren't privatized at a certain point. Anyway, how things going? Things are going pretty good. All right, good. Everything's proceeding. Andrew says, try chaga mushroom tea as well, a native remedy. Is it caffeine? Okay, anyhow. So where were we? Yes, what was I talking about this morning? That's what's important. Okay, so no, we talked about that. It was a stunning amount, a lot of news today. Holy shit. It was like, there was very little stuff that was interesting yesterday, but today there was just, I don't know, I guess nobody felt like reporting anything yesterday or whatever. Because we haven't, we didn't work Monday last week, right? So it's like, I think people were just annoyed that they had to work. We had the oil report, 500,000 barrel build. The SPR was not touched. The gasoline was another build. This is not a good report, and a very small draw on distillates. It's none of this is good for the oil bulls, but nonetheless, that doesn't stop oil. Well, where is oil? There it is. Doesn't stop oil from hanging out. Still holding around $80. So we'll see what happens. Natural gas is a disaster down at 309. So there was a lot of stuff, and when I read the news, I generally, like, in my head, it's like counting cards in Vegas. I give it a plus or a minus. So like, as I'm reading the news, I look at this and be like, okay, that's a plus, and that's a plus, and that's a minus. Although it's not an economic minus, but it's a state of the world minus. NASDAQ slumps is that's just telling me what happens. That I don't really count as a plus or a minus. Glitch in the NYC, it was just a glitch, who cares? Stocks again, don't care. BOC raises rates. Now I commented on this one. Oh, that's my comment, except it wasn't really clear it was a comment, I guess. So the BOC raises the overnight rate by 25 to 4.5, and I said we are not going to end up with a lower rate than Canada, because we were just talking about our rate. Our Fed funds rate at the moment is at 4.37. We're okay, so technically they're about the same place as we are. We're where they are, but I'm saying we're not. If they're raising, we're going to have to raise too. We can't stop and have Canada pay more for their bonds than we do, because Canada is just as viable of a country as we are. They're way less in debt. So people will prefer their bonds to ours at an auction, and we can't have that. We have to sell our bonds. In fact, we're selling $100 billion worth of bonds today. I bet that auction went well. That might be why the market's in a good mood. We had to sell $100 billion worth of bonds just today. It was a 2-year auction. It wasn't even a big auction. So we have to sell just massive amounts of bonds. So if other countries are out paying for rates, we're going to not be able to sell our bonds. And so, and for the Fed, that's a problem, because the auctions are auctions, right? So in other words, if nobody's buying our bonds at 4.37 because Canada's at 4.5, then our auction will go up. It's a negative kind of auction. It's like nobody's, as they say, who's going to lend us money for 4.3%? And if nobody's going to lend us money for 4.3, they have to go the guy bangs his gavel. No takers for 4.3, 4.4, anybody 4.4, 4.5, 4.6. So that's what happens. If nobody takes the bonds, then the prices go up. Then the interest rate goes up to entice somebody to make a bid, and it keeps going up until they get rid of all their bonds. So when they have the auction, that determines the rate. That's a real rate, not what the Fed says it is. Where the Fed says it is what they try to control, but they can't control the auctions. So generally, an auction will go off around the Fed funds rate, but if other countries start offering higher rates and everybody comes to the Fed auction saying, well, I just got 5-6% from England, I just got 5% from Canada, I got 5% from this other country, and then they come to the U.S. auction, they sit there, and the U.S. guy says 4.6, 4.7, 4.8, and everybody's just sitting there saying 5. We're waiting for 5. 5 is what we're willing to buy bonds for. If you don't give it to me, I'm just going to go back over to Germany and they'll give me 5. That's no good. And if the Fed is sitting there with a 4.5 rate or 4.37 rate, and because their range is 4.25 to 4.5. If the Fed is sitting there with a 4.7 rate, 4.37 rate, then what's going to happen is they're going to look like they can't keep the rates under control. They said they set the rate at 4.37, yet the auction went off at 5. That makes the Fed look ineffective and unable to control the monetary policy. That's the worst thing that can happen, because in reality, the Fed is ineffective and can't control the monetary policy. But you don't want to tell anyone that, It's like my brother. Here's a good example. It's like my brother. My little brother is 2.5 years younger than me, but he's well, he's 6'7", and I'm 6'1". He got bigger than me when I was when he was 13, he got bigger than me. So he was 13, I was 15, he got bigger than me. And I remember, I think it was like maybe I came back from college. You know, I think I came back from my first year in college, and he was much bigger than me. And then we were in the pool, and we had like and whatever, for whatever reason, we had an altercation in the pool. We generally didn't have any problems with each other, but for whatever reason, we had an altercation in the pool. And I drew back my fist, and I was gonna hit him, and he cringed. But as I'm drawing my fist back and he cringes, I'm thinking to myself, oh my God, he's like way bigger than I am now. So I didn't hit him. And I left it at that, and that's the last time I ever even threatened to hit him, because I realized as the older brother, I was like, you know what? I need him to have, I need that mindset in his mind that he's like, he has all these years of fearing me. And I'm like, the worst thing I can do is actually try to prove it, because he can probably kick my ass now. He's like way bigger than I am. So that's what the Fed is like, right? It's like they have a mindset. People believe that they can do something and believe that they have power, but in reality, if they actually try to exercise it, they can't. So that's why they talk and talk and talk and talk, because they're just trying to jawbone the market to get where they are. But God forbid, but they can't stomp their feet and say, we're not going to raise rates anymore. And that's why it's so confusing when you get the signals from the Fed, because they may think it's time to lower rates and whatever, but there's always going to be one or two guys that like that little voice in the back of my head that says, wait a minute, you can't say you're going to stop raising rates if every other country is still raising rates. You can't be uncompetitive. It's not going to work. They're going to call your bluff, and then boom, the emperor has no clothes. So you have to realize the reality of their situation is they're a paper tiger. They're not really going to be very effective in altering monetary policy, especially when the only other weapon they have is their balance sheet, and that is over leveraged to the max. Fed balance sheet. Recent balance sheet trends. Ha! There you go. All right. So this is not really an improvement. They were just about to hit $9 trillion on their balance sheet. Now, in 2008, it was not even a trillion. Not even 1 trillion in 2008. And then we got to here, and we had hit 3.7, which is still a stunning increase from a trillion. But they started, we had the crisis in 2008, and the Fed began buying assets, right? They started buying and buying assets. How does the Fed buy an asset? This is how the Fed creates money. They have a blank checkbook. They don't have any, there's no money behind it. The Fed doesn't have a cash balance. They have the ability in something anybody wishes they could do. They write a check, and the check is for cash. They purchase an asset, which is usually a bond, but in this case, it was a lot of real estate and stuff. All right, so they would purchase an asset, and let's say they buy a hotel from a bank. The bank's stuck with a hotel. They're like, I can't do anything with this, and God forbid the bank actually tries to sell it. Let's say they lent out $200 million on the hotel, and they foreclosed, and now they've got this hotel. Now the hotel was theoretically going to be worth $400 million. The bank felt safe giving a $200 million loan, but in fact, everything was so inflated that the hotel was maybe worth $100 million tops in reality. So the $400 million hotel is now a $100 million hotel, and you still can't get anyone to take it because everything was collapsing. So the Fed would take the hotel, pay the bank the $200 million, making the bank whole on their loan, So the bank now has their money back without having to report a loss. The Fed buys the hotel for $200 million and doesn't sell it and declares a $200 million asset, because that's what they paid, on the books, and that becomes the backing for the check that they write. So after they purchase the asset, they, without having it appraised or doing anything else, they take the asset, put it on their books, and against that asset, they're able to write checks. But they wrote the check first and then got the asset. And that's how the Fed expands their balance sheet. And they do the same thing with a bond. They do the same thing with a treasury note. Whatever they want to buy, they buy it, put it in the vault, whatever, you know, and then they say, there's our assets. And that's how the Fed's balance sheet goes to $9 trillion. We had the first financial crisis where it went from 1 trillion to 4.5 trillion. And people said that's nuts, and the Fed started whittling it back, and they got all the way back to 4 trillion before we had the next crisis. And then the Fed says, oh shit, we better start buying assets again. They bought in this February 17th, 2020 until June 2020, they went from basically they bought $3 trillion worth of assets. That's 75% more assets than they ever had. They bought $3 trillion worth of assets in 6 months. Not even 6 months, in 4 months. That's freaking insane. But they said, oh, no, wait a minute. And then they buy $2.5 trillion more of assets. Again, totally insane. Or 2 trillion more of assets. Totally insane. And now they're finally going to say, now they said, okay, we're going to start selling off these assets. And now, fortunately for them, these hotels, houses, whatever they took possession of back here, they are now worth more. So they've been able to sell off their real estate assets and mortgage assets first, because they got that did come around. And it's good because the Fed can be very patient, right? They don't have to do anything with the property. It doesn't have to make any money. They just have to eventually one day sell it, and they just wait. Even if it takes them a decade, even if it takes them 2 decades, they eventually sell it and get their money back. And then they say, victory. They don't have to declare a profit. They're not a business. They just take the thing on their balance sheet and sell it. That means, and that's why they can buy the treasury bills and the bonds with impunity. It doesn't matter whatever interest they pay, even if the interest is in no way, shape, or form keeping up with inflation. So let's say they bought a whole bunch of 2% bonds. Let's say they bought $1 trillion worth of 2% bonds, and now bonds are 4% or 5%. And so the Fed is technically, the bonds are technically worth a lot less. The Fed's not going to sell them. They're just going to keep collecting the interest until the bonds expire. Then they get all the money back, face value on the bond, and they've declared a profit of all the interest, even though in reality, it's not a profit because inflation is eating it up. So that's what the Fed can do. But it's still, they have expanded their balance sheet to a ludicrous extent, and it's just it's unsafe, unhealthy, and it doesn't, they can't really do another 3 trillion. They can't go to 12. It can't be half our GDP on the Fed's balance sheet. Technically, this money is the same thing as debt for the country. If the Fed takes a loss, that loss goes on the books of our national budget. If the Fed makes a profit, the profit goes on the books too. But they don't make a profit, not the way they're buying stuff. Well, like I said, those interest payments are a profit. So that's where they are. That's their other lever, and that lever has expired. That's why they want to reduce their balance sheet. If they can reduce their balance sheet, it gives them firepower to be able to deal with the next crisis. But right now, they have no firepower. And that brings us back to something else, which we'll talk about with Japan. Brainerd, blah, 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 don't care. Jeremy Grantham, he's bearish, obviously. Global investor confidence is a little higher. Business uncertainty eases, increases on employment. But the thing is, the employment cost is still going up. That's one of our main concerns about the economy. Freeport McNamara, FCX, I like them. Another crypto exchange. This is Contagion. It's a very slow moving contagion throughout the crypto. They're all connected to each other, and they're all getting hit really hard by the FTX collapse. Farm is insurance is they missed. Progressive, the Q4 earnings were down, but they still got this. The stock still went up, so that's okay. Boeing has another problem with more declines in the loss. But again, I think Boeing's one we want to invest in actually. But we'd like to see them. I wanted to see earnings, so we saw earnings now, and we'll see if we can find a bottom with these guys. They actually there's no bottom. Look, they're still going up. So I think people realize that the past is the past at this point. So I'll have to take a look at them again. Union Pacific, Textron, Horton, that's a builder, and they got cut, and that's, you know, so you got, and housing is one of our top concerns right now. Philip Morris, I'm not gonna read all these. Cheesecake Factory, we like Cheesecake Factory, they don't like them. Where Amazon workers go on strike. See, this is what the stuff that, the point of these articles is you got to think about what's going on here. The warehouse workers in Amazon are on strike. Why are they on strike? Because they didn't do what Walmart did. Walmart just gave everyone a $2 raise. Not that that's enough, but at least they did something. And frankly, when you're making $12 an hour and they give you $2 and they give you 14, you feel like they did you a big favor. It's $80 more a week. It's $80 more a week. It's kind of sad, actually. That's what it works out to. So they gave you $80 more a week, and now you can parties or whatever. I don't know. I can't even imagine how people live like that. I really can't. Even my daughter started walking dogs. She makes like $25 an hour walking dogs. You know, it's just, I mean, I can't even imagine people working for these wages. It's crazy. Papa John's, blah, 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 cheesecake, and then Google, blah, Microsoft lowered their guidance, of course, that's a big concern. Then Texas Instrument goes south with the chip makers. Broadcom may get their thing held up. Booking, you know, is they're going down, but we were interested in that if they go down. And AT&T did good, which is good because we have a lot of AT&T. A lot of people enrolling in Obamacare. So now, what's that going to affect? That's going to affect the regular health insurance companies. It means they're losing 16 million people joined Obamacare. That means 16 million people quit other health care. That's a lot. We only have 300 million people in the whole country. 16 million people left, which is what, like 5%, right? 5% of the people walked off other healthcare services. Mortgage, so, you know, and again, this is great that Obamacare is working and everybody's joining it and so on and so forth, but it's bad because there is a transitional period where the healthcare companies are going to start falling apart. Mortgage delinquencies are higher. That's a bad thing, obviously. Google, blah, blah, blah. And see, this is interesting. Google will see limited hit from the antitrust, which is what I was saying. It's like they don't care. And then the key is Google has destroyed the competition. Yeah, that's why they're being sued. That's Garland saying that. But he's like, okay, they killed everybody who competed with them. There's nobody left. That's why we're suing them now, because there's no one left to fight them except the Department of Justice. Airbnb is lower for whatever reason. Tesla is egregiously overvalued. Chip stocks, again, that's kind of redundant. We got the debt fight, which is, by the way, everybody ignores. But if one day it's because we keep having these debt ceiling fights, and we keep and it gets resolved before it's a crisis. Although they act like it's a crisis from the day it starts. But God forbid we don't resolve one of these things, and we're screwed. I mean, you want to see a country unravel quickly. Imagine if we just actually default on our debts. China's getting really pissy with us right now. Freezing weather in Asia, and there you go. Now, what do I think of right away? I think of the coffee crop in Vietnam being destroyed. So you got to think of that. Then what do? I go over to futures, I go over to coffee, and I take a look at if it's being affected yet. Oh yeah, look at that. Okay, so the cold weather is already boosting coffee. And we had talked about this a couple of weeks ago when it was down here, and I was like, I think that's low enough. We want to start buying Joe. In fact, did we not buy Joe in the short-term portfolio? I think we did. Joe, there you go. So smart. All right. So, in November, we already were looking at the weather trends, and we decided that Joe was going to be a good investment. So that was back here, and it actually fell lower, but now it's coming back. So, our target is $50. All right, but back in November, we thought the winter was going to be very harsh and would be damaging to the coffee crops. Whoa, oh, what did I do? No, wrong one. No, damn it. What am I doing? Where is my thing? Oh, there it is. It's like, so crazy. All right, anyway. So that's all investing is. I mean, you guys, I mean, I read all these. I don't know if I expect you guys to read all these, but at least think about what it says, and some of these things matter, and that's what I do. I mean, I'm reading these things and I'm saying, well, how's this going to affect stuff? What's it going to do? So back in November, I'm looking at the weather trends and saying it's going to be a really cold winter, and we're going to have those polar vortexes, because that's it for the rest of our lives, most likely. Now we screwed up the atmosphere. And we've screwed up all the normal stuff that used to happen. Oh, by the way, if you take a flight these days, your chance of hitting turbulence is up like 5 times what it used to be. And the turbulence you hit is going to be nasty. They made fun of Al Gore, of course, any chance that they have to make fun of Al Gore. They made fun of Al Gore because he was talking to the World Economic Forum. And I don't know exactly what he said, but he said something to the effect of, the warming of the oceans is like hundreds of atomic bombs going off in the release of energy. That's a true statement. It just sounds crazy, but it's a true statement. It's like it's the EA equals MC squared of the thing, right? Energy equals mass times the speed of light. Mass times the speed of light, which is a huge number, 186,000 miles per second, if I remember correctly. So energy, E, equals mass times the speed of light squared. So the energy released from matter under various conditions is an incredibly large amount. And that's what Al Gore was saying, is he's saying that the equivalency of warming the ocean, which is, whatever billion, trillion, blah, blah, blahs of mass, right? So the mass of the ocean being warmed by even 1 degree is effectively the energy of hundreds of atomic bombs. It is a true and correct statement, but it was made fun of because people don't understand the math of the thing. But in reality, so bottom line is, energy is being released from the ocean at a massive scale. Where does it go? It doesn't disappear. There's a conservation of energy law. So energy is going into the atmosphere. It is warming the air, and it is also causing currents to destabilize, like the jet stream is destabilizing. Other atmospheric effects are destabilizing, and also the air, if it's warmer and the ocean is warmer, it's more active, and therefore you're getting bigger and stronger hurricanes. You are getting and a constant state of turbulence in places where they've never tracked it before. So now they don't know where the turbulence is. They used to be a pretty stable, there used to be a pretty stable atmosphere that didn't change too much. Now it's getting destabilized, and it means you can't count on anything, including the jet stream, which is extremely important for travel by air. And the Gulf Stream, or whatever you call it, whatever they call that thing, the Atlantic, that warms the Atlantic. There's a whole bunch of stuff that happens. It's really important. And then, of course, the fish get screwed because there's currents, that they don't have a very high range of temperature that they can live in. And if those currents start changing on them, they have to move, but the place they move to might not be good for food. because the fish could move, but it doesn't mean the krill can move. And if the krill don't move, then these other creatures can't move, and the fish eat the other creatures. It's all got to go at the same time. There's a whole ecosystem of big fish eating little fish all the way down to like a microscopic level. And if anything happens, if the big fish have to move because they can't survive in the temperature that's changed where they are, and they move to somewhere where there's not the same kind of little fish, they can just die off from that. And and you can't. It's hard to you can't move the microscopic creatures unless they want to or whatever. They may be happy in the temperatures they're at. They may stay where they are. They may not migrate. So there's a lot of stuff like that going on. Anyway, bottom line. So bottom line is huge amounts of energy in the atmosphere, much worse storms, and much more energy is in the atmosphere. It's been released from the oceans, being released from the oceans, and you will experience it if you're traveling by air this year. You have a very good chance of hitting some turbulence that's going to make you be like, holy crap. And it's not good. It's disrupting air travel. So that's, and this is only the super early signs of how badly we've screwed this planet up. It's like the beginning of a disaster movie where like only a couple of things happen, and then nobody sees the signs, and somebody starts putting it together, and you're like, hey, guess what? We're all gonna die. Anywho, so Japan cuts view of economy. That's not what I was looking for, but that's bad too, right? So there's a bad thing. That Japan is the third largest economy in the world, and they're cutting their view of their outlook. Another guy who's negative on stocks. The NASDAQ is my favorite short. Thanks a lot. We're sending tanks to the Ukraine, and the doomsday clock. Oh, it says that right here. We're battle tanks to the Ukraine on the same day the doomsday clock hits the closest point to midnight in history. In other words, midnight means end of the world. And we're 90 seconds from midnight right now on the doomsday clock. It's crazy. And that's before this happened. Oh, this was the thing about Japan I wanted to talk about. So Bank of Japan owns more than 100% of some debt. So in other words, they buy the debt, and then they buy it again, and they end up owning it twice. So it's what the Fed does on steroids. These are the guys who are really out of control. It's like they double count. The BOJ lends out securities to alleviate a liquidity crunch in the market, but some of them get sold back to the bank, which means they get counted twice. So they lend it to somebody, then they buy it from the person they lent it to. This is how they're keeping their banks. Our Fed, like I said, our Fed takes bad debt off the hands of the banks so that they can pretend they didn't lose money. So a bank has the casino that was worth, well, that had a valuation of $400 million when they loaned against it. They loaned $200 million against the casino, but then all of a sudden it's only really worth $100 million. The bank can't recover their money. Even if it's worth $180 million, the bank would take a $20 million loss. So they go to the Fed and say, hey, I got a casino for you. And the Fed will pay them back the $200 million they invested, and then declare that they have a $200 million asset. We just talked about that. Now, what does the Bank of Japan do? The Bank of Japan then takes the casino and lends it to somebody, right, who gets financing for it, and then the bank buys the casino back and puts it on their books again as an asset again. That's insane, right? It's completely insane. That's why the POG looks like that. Oh my God, what a disaster. And Japan is 250% of their GDP in debt. That's the government of Japan. The central bank is again some ridiculous thing. I don't even know what it is, but it's like insane. And in fact, here you go. They're talking about it. And see, this is stuff that starts to get to a point where it's so ridiculous that people are going to stop doing it. Okay, so these are various forms of bonds, whatever. They own 114% of the outstanding debt. They own 111% of the outstanding debt on these series of bonds. 106, 103. We've broken the rules of accounting at this point for them to keep up this farce of pretending that things are okay. They're not okay. So I put that as a negative, right? Okay, so minus. Australia's inflation boosts the RBA rate hike bets. Again, Australia is going to start offering higher rates than we do. Can't have it. We have to keep raising rates. Stagflation. I talked about this forever. Ship to mine graphite is a shortage for graphite. That's bad too, because graphite is graphene, and graphene is important in a lot of things, especially more so as we're doing all the new technology. The Senate's investing egg price. The Senate's investing egg prices, and they're investing Taylor Swift ticket prices. And meanwhile, oil prices are still insane, but oil prices were insane last year. Nobody investigated that. That was okay. Nobody's investigating colleges and saying, what the frick are you doing with this money? What? I mean, don't get me started. So Jackie's paying $75,000 at Stevens. All right, Stevens student population. So 7,200 students. 7,200 students times $75,000. $540 million a year in tuition to teach 7,200 students. That's obviously $75,000 per student. So, oh, that's interesting. Let's look at that. Stevens teacher population. Oops. Yes, I did. Stevens teacher population. Oh, yeah, Stevens College. Diversity, facts and figures. Give me a number. Undergrads, graduates. Doesn't tell you the faculty? Oh, maybe I got to say faculty. Stevens College faculty population. Students by staff. There you go. Students, grad students, faculty. There you go. That's what I thought. 335. Oh, you sons of bitches. 335 teachers are teaching 7,000 students. It's actually lower than I thought. So there's 20 students per teacher, right? That's roughly 20 students per teacher. I want to cry. $1.5 million per teacher. They don't actually pay the teacher that, do they, though? They pay the teacher, I'm going to say $150,000 maybe. So where's the extra $1.2 million per teacher? Okay, the frickin' school's been there since the dawn of time. Oh, there you go, 1870. How convenient. Okay, so it's been there since 1870. They own the buildings. It's not like they're buying new buildings. You can't buy new buildings in Hoboken if the prices are insane. But they're not expanding the college. They're not building new buildings. What the frick? And it's not just them, obviously. It's every college. But this is what I just happen to be, paying attention to. What is going on? Why is the Senate not investigating this and saying, what are you doing with $1.2 million more than you pay the teachers per student? Per teacher. What are you doing with this money? $300 and something million a year. There's no reality to the cost of a college education. Like I said, it's another situation where the capitalist machine has taken over education and is just sucking every penny they can out of it. And they're doing it by putting the students or the parents of the students into massive debt with student loans and so on and so forth. That's why we have a student loan crisis. College was unaffordable, and the government said, well, rather than fix the unaffordability, we're going to create this loan program that lets you pay the unaffordable prices. So we got this easy payment, so that way you don't feel so bad about your unaffordable college. But the reality is, it's still money that you don't have, and it hits you, especially for the students. I mean, to start out coming out of school, and they do have student aid and whatever for if you qualify, but not to a great extent. I mean, I know I talked to the kids there, Jackie's friends and stuff, and they're taking out $50,000 a year worth of debt. Basically, they get a $25,000 scholarship, and they think they're getting a big break by only paying $50,000 a year for their school. And they come out of a 4-year school $200,000 in debt. That's insane. So if you're a poor kid and your parents can't afford it, I mean, even if you're a middle class kid or you're an upper middle class kid, your parents are going to take out a $200,000 loan, or you're going to take out a $200,000 loan, but you come to college $200,000 in debt, and that's going to disadvantage you for a decade, maybe 2 decades. That was the money you could have, and when you're paying that money, that's money you could have put into a retirement account. It's money you could have put into purchasing your first home or something like that. It's all being taken away from you. It's so freaking wrong. Let's see. This is interesting. Goldman Sachs says 4 U.S. cities will have a 2008 crash in home values is 50-60% down. Sure, allow ads. What do I care? He's getting old. I know these guys.
What if we could see cyber threats in real life? Yes.
Wow, I can't believe how old he's getting. I guess I'm getting old too. I've known him for 40 years. Let's see, San Diego, Phoenix, Arizona. Okay, so San Jose, San Diego, Austin, Phoenix. These are big places. Phoenix, at Maricopa County, is the biggest county in America. More than 25% decreases in home prices. Home prices across the U.S. fell 27%. They fell a lot more than that. I'm not sure what they mean by that. Anyway, so as bad as 2008 though in those places. A lot of people are going to be upside down. Phoenix is millions. San Diego also millions, so probably 3 million here, 3 million here, and then maybe 1 million each on these other guys. So you got like 6-8 million homes, which is getting close to 10% of the entire U.S. thing, and that's just where they're saying those particular large cities. But overall, we're going to have another housing crash, and whether it's a 10% crash or a 20% crash, it's still going to suck. So that's a huge thing. And thousands of people being laid off at the tech companies, remote workers. Oh, here's the thing. I was thinking about that when I was reading this article. Remote workers. Well, that reminds me of something else I got to talk about. Remote workers. Here's the thing: when you can do your job remotely, and I've told people this, but what are you going to do about it? It's just the way life is. Everybody's like, oh, I want to work remotely. I don't want to go to the office anymore, blah, blah, blah. Well, if you are working remotely and doing your job remotely and you're not going into the office, then your job can be outsourced to anybody who's sitting at a desk anywhere in the world. And the average price of labor that is paid anywhere else in the world is about a third of what you're getting paid. So all these remote workers who think they won some gigantic victory by not showing up at the office have only basically shown the people who own the offices that they don't need to employ people locally. And therefore, they can employ those people anywhere. And you may be, I don't want to say racist, but you may be predisposed to think that people in other countries can't do the job you can do. But in reality, they are probably as qualified as we are to do the same jobs. And there are certain things that they can do and certain things they can't do. But the thing is, if there's a billion people in India who speak perfectly good English. I have an accent, but they speak perfectly good English. They read perfectly good English. So there's many, many more people in India who are thrilled to work for $20,000 a year, who are qualified to do $100,000 a year tech jobs. And there's been a prejudice by companies forever to say people need to show up at an office and come to meetings for us to be an effective organization. Now that myth has been blown. So now what you've done is shown the tech companies and shown all companies basically that not everybody needs to be somebody who comes to your office. So for now, they've been hanging on to all these remote workers who think they're such geniuses by working from home and proving to their bosses that they can do their job from home without coming in. But what they've done is proven to their boss that they can be replaced by somebody who's in India who has the same resume and has the same skill set, but will work for 1/3 the price. So this is going to be a snapback like you wouldn't believe. That's going to hit so many people, not to mention the fact that robots are going to come and take your job anyway. So there's two problems. Because, by the way, artificial intelligence doesn't have to be, AI. I was just complaining about how AI isn't really intelligent. It's not really intelligent yet. It will be one day, but it's not yet. But you don't need to be intelligent to answer a question. So, even right now, customer service things are being replaced by robots. And one example is think about the person at the drive-in window at McDonald's or whatever, right? So the person driving the window at McDonald's says what? Hi, welcome to McDonald's, have a nice day. What would you like to get? I'd like 2 French fries and 2 hamburgers and blah, blah, blah. Great, would you like a drink with that? These are programmed things. Now, the customer may once in a while say, can I get this on it? Can I get that on? Now, the state of AI now is that it can easily figure that out. It's a loop. It says, can I get pickles with that? The thing goes to its database, says, are pickles available with this thing? Sure it is. Okay, here it is. Here's how much it is. Here's the change in the order. Here's how to process it. All that can be handled by AI. Very few things are going to come up that don't. And if something comes up that can't be handled, the AI will alert the manager, and the manager will take a look at the screen, read the conversation to that point, and then say, oh, hi, this is Stan, the manager. Can I help you? Brenda took a break or whatever, Brenda, the AI, took a break, or call, or the manager just say, hey, the computer called me over to check this. But that's not going to happen very often because most people say, I want a shake, I want fries, I want this, I want that, right? When they order fast food. So that gets replaced. So you have, and that can be, and again, it's not local. When I go on to ChatGDP, they got to work on the amount of people they can serve. It can't come up and say it's not available right now. But I go on to ChatGDP and they're charging me $49 a month or $48 a month for access. And I can do that and customize my ChatGDP for each store that I have, and pay $48 a month instead of hiring 3 different employees for 3 shifts and paying them $2,000 a month or whatever it works out to. So I've saved a hell of a lot of money, right? So as this stuff advances, you just get rid of more and more and more service people and people who answer basic questions and customer service people and so on and so forth. Anybody who's dealing with people remotely can get replaced because you wouldn't even know the difference. But as far as remote workers go, you can be replaced by human beings who just don't live where you live. It doesn't matter. It doesn't matter if you are calling in from if your company's in New York and you're in New Jersey. It doesn't make a difference to the company whether you're in New Jersey or somebody's in the Philippines or someone's in India or someone is in China or someone is in Africa. As long as they can find a person who can match the skill requirements and answer and do what you do, they don't need you. They don't need you, and you're bitching and complaining about health insurance from people who live in countries where the health insurance is already covered. And think about that now, because all these other countries are subsidizing the lack of health insurance in the U.S. because we just don't hire people in the U.S. So screw them. That's why 16 million people are joining Obamacare. So there's global repercussions to these things, and they take it's not instant, but it takes years and years to change. But you got to look forward and thinking about those changes and how it's going to impact stuff. Now, oil steadies as not for any reason, like we had a bill today, but then people say, oh, now they've got stories to prop up the prices. China demand is going to be a story. We keep hearing that for the last few weeks. And OPEC, now there's going to be an OPEC meeting. There's always an OPEC meeting. But they're like, oh, OPEC's going to save us and China's going to save us and whatever. They're all speculating that something's going to go their direction, even though clearly the data is not. That's why oil is probably going to still collapse. And that's why I didn't actually take the profit when I could have on the dip. Where's oil? So I think 80. I think it's just consolidating for a break below 80. I think this is a lot of bullshit about how it's going to stay up. Celebrities call on UK banks to stop financing fossil fuels. Again, trend that is spreading. All right, people, the banks stop financing it, then the whole thing starts collapsing. And all around the world, this is sort of things happening. Oil is being attacked in all kinds of directions. Oh, pro oil commercial. This is a good test of how smart Google is. There you go. Is this the one that they just did? I think so. Hang on a second. What's going on?
That connection was brought to you by petroleum products. But what if we lived in a world without oil and
gas? Oh, yeah. So he's saying, what if we lived in a world without oil and gas? And they show you all this stuff disappearing. It's like, oh no, I can't put oil in my hair. This is literally a commercial that is airing now all the time, telling you how great oil is. Look how much we would miss things if oil did not exist. I hope you guys can see that and it's not like blurry or something. But this is, to me, hysterical. Energy transfer. So it's a lobbying group. There's a lobbying group now to get you to say, oh my God, we need oil. Don't take our oil away from us, blah, blah, blah. So talk about insanity, but they're, they're losing ground when that happens, right? They're not doing that for fun. They're in trouble, and they are now hiring lobbying groups and PR groups and things like that to try to save the image of oil. They just want you to. It's like a heroin dealer. If you stop using, okay, they stop by. All of a sudden, they stop by. They never stopped by your house before. Not that I use heroin, but I'm just saying. I mean, you see it enough on TV and whatever. But it's like you're buying from the heroin dealer, and for 10 years you go by and you give him money and he gives you a packet, and that's your entire interaction. Then you stop going by, and all of a sudden the heroin dealer shows up at your door to check on you. Hey, you okay, man? How's it going? Because you're a customer. They want you to stay hooked. They don't want you to go straight. They don't want you to fix your life. They'll come by and they'll say, hey, come on, a little free sample, anything. You get it off the wagon for a while, have some for free. Congratulations. This is what oil's doing now. They're like a heroin dealer you're trying to break up with. They just want to get you back, baby. What's it going to take? Don't forget all the good times we had. So this is a trend, and you just got to realize it's not a quick thing, and they're fighting it. It's going to be a cycle, but in 20 years, I'm telling you, oil is a dead thing. It's going to be, you know, and we talk, you know, I don't like to always talk about the same thing, but I never know who's actually heard or not. But there's a concept of stranded oil. In other words, there are these massive reserves that the Saudis have and the Kuwait has and whatever, and maybe in the US people have too. They've got a billion barrels here and a billion barrels there and a billion barrels there. And the projection is that over the course of the next 50 years, we're going to use it all up. But, and this is why they've stopped a lot of exploring, because the reality is we probably have more oil now that's been discovered than we're going to actually use. And that means we're going to have unused massive amounts of oil. So if it takes us 20 years to get basically off oil, not everything, but to replace many, many things, replace most plastics, replace all forms of energy for transportation and so on and so forth, basically. For lubrication, maybe we'll still need oil for some other things, but they'll of course try to fix that too. But that's lower in the food chain than worrying about the transportation industry and things like that. So if in 20 years we solve these problems, and let's remember 20 years ago, you didn't have an iPhone. So, you know, 20 years of technology makes a big difference. So if we're focused now on getting rid of oil and we spend 20 years going at it, you can imagine that if I said to you in 20 years from now, oh, that's a good example. In 1999, if I had said, we're going to get rid of the telephone, you will no longer have a corded telephone in your house, that would have been ridiculous. Nobody would have believed it. 20 years ago, that would seem absurd, that there would be no more telephones, that the whole concept of a rotary phone or even a push button phone with a cord sitting on a desk would be something that would be only for people who had offices or something like that, that no homes would have a rotary phone anymore. Yet now, boom. All right. Or my kids right now, my children do not watch TV. They watch TV programs, but they watch them on their phones, which I cannot even imagine how they get pleasure out of that. I have a 90-inch TV with surround sound and all this stuff. They never look at it. They would rather sit there and look at their teeny little screen in front of their face with the ear thing in. I don't even get why they're doing it. I'm like, you have a TV right there. You know, we get hotels and in their room there's a TV. They don't turn it on the entire weekend. They don't put the TV on. They watch it. They watch everything on their phones. It doesn't even occur to them to look at the TV. You know, even the same show, even live stuff, the same thing is right there on the TV, 10 times bigger. They're not interested. Weird, but who knows? Maybe that's going to happen. Now I realize. And I do realize this, if I have my iPad, which has really good sound, if I have my iPad on the couch with me and I put it, you know, I put it like a couple of feet in front of my face, you know, normal viewing distance, it actually is as big as my 90-inch TV. Like in my field of vision, I can block my entire TV with my iPad and I could watch a show, and I would tell you that the picture is probably better on the iPad. And the sound is probably better on the iPad too, frankly. Not as, you know, bassy, but generally it's got great sound. So yeah, it's possible that 20 years from now we won't have TVs. There will be no point. I'm not there, but my kids are certainly going to be there, and they may in their entire lives never buy a television. And you got to think about that. You got to think about that for if you're investing in Sony. You got to think about that for the chip companies that make a lot of television chips and so on and so forth. Are they going to transition to these things? To the chips they make now, are they going to be able to go on iPads? No, because iPad already uses a totally different kind of chip. Therefore, if more and more people start doing that, and my kids might say, okay, yeah, if I want to watch something on a big screen, I'll get the iPad. That's what they'll call the big screen. But there's no, when you look at your field of vision, I mean, even take your phone and hold it up. But if you think about the iPad being bigger, if you don't have an iPad, but if you have an iPad, it's like 4 or 5 times the size of a phone, and it literally will block out your entire view of your living room by putting it near your face. I don't mean uncomfortably near. I mean just putting it in front of you. It's going to be as big as the TV that's 10 feet away. So what does that say about an entire thing getting wiped out? So like I said, so technology, which didn't exist 20 years ago, is on a path to completely eradicate something that you could never have imagined would be eradicated, TVs. How the hell is that going to happen? But think about how laptops are, have been knocking out computers in the same way, right? And again, my kids only use laptops, don't really even want a computer. My older daughter, Maddie, she likes gaming, so she has a computer for gaming. That's all she does on it. But everything else she does on her laptop and her tablet. All her art stuff she does on her tablet. She would never do anything arty on her computer. Anything social media, so on and so forth, that's also something she'll do there. And her laptop is where she does her classwork. The computer is really just there to play games. So things change over time, and that's why these news stories are important. That's why we pay attention to this stuff, because you've got to think in your mind about the investments you're making and what's going to be there down the road, what's growing, what's shrinking over time. This cracks me up. We don't have limits for lead in baby food. Lead? Oh my God. I'm like, what is wrong with this world? Serta keeps going. You know how you look at mattress, how you go around and you say, how can there possibly be so many mattress stores? There can't possibly be so many mattress stores. They're going bankrupt again. They went bankrupt 2 years ago. They're going bankrupt again. This is ridiculous. Amazon, of course, has multiple problems, like the labor problems and these cloud problems and cloud use. And I said this forever. I have said forever that I don't like the cloud companies because eventually there will be too many cloud companies, and because there's no barrier to entry. It's a server farm. So eventually there's too many cloud companies. They start competing. And once you stop with the growth, once most companies are already in the cloud and using cloud services, now it becomes a price war for all these companies, because the memory gets cheaper and cheaper every year. The storage gets cheaper and cheaper every year, and the companies don't need these super fancy places. It's not that hard to compete with any of them. Therefore, it's a tougher and tougher business. It's not going to have the ridiculous margins that they've been enjoying. Amazon built, and for Amazon, that's really dangerous, because Amazon doesn't make money selling stuff. Amazon loses money on their retail operation. They make money on Prime memberships like Costco, but they lose money selling you stuff. It's not a profitable operation. That's most of what they do. And they make money, and really almost all the money they make comes from cloud services. So if that starts getting squeezed, you'd be amazed at how Amazon can start getting into some real trouble. Twitter, remember Twitter was down 50%, and everyone said, oh, Elon's in trouble. Now it's down 70% in ad spending. That's after they begged the advertisers to come back and made all these deals, and he even signed Tesla up for a huge advertising deal, which is obviously bullshit because it's his own company. Even with all that, they're down 20% more than they were down in November on ad spending, because he's completely screwed that thing up, man. What a disaster. Iceberg size, London breaks off Antarctica, whatever, What's a little global warming between friends, right? Now we got some questions. Let's see what's going on. All right. Anush says, looking at copper and iron ore, it looks like the inflation will be back with a vengeance in the later half of the year. CPI is a comparison with last year. What is your inflation outlook for the later half of the year, especially if oil doesn't fall due to the war? Well, there's a lot of what ifs there. Yeah, I think without collapsing the economy into recession, which is generally the Fed's plan, but they're hoping they can push us into a mild recession. But you're not going to get inflation much below 5-6% without a recession. And we're not in that kind of recession yet. We're not really contracting at the level, especially labor, because exactly what just happened. Walmart just today said we're going to pay $8 billion more to our labor force. And that's half of their total profits. There is obviously there's no possible way they're not going to raise prices if they're doing that, because they're not going to let their profits tank 50%. But it's very easy to compensate for it because they only have to raise the price of the stuff they sell by 1.3% to pay $8 billion, because that's just the economics of Walmart. They don't have a huge margin anyway. They have $600 billion in sales and they make $18 billion. So that's what, like 3%? Is that right? 600, 3%. Damn it. Yeah, it sounds right. 1% of 600 would be 6. So yeah, that's correct. Okay, there you go. That's how you think of it. 1% would be 6. Therefore, 3% is 18. So their profit margin total at Walmart is 3%. So what? So that's how crazy competitive these kind of businesses are. But that's why they have 600 billion in sales, because they're running at a 3% profit margin. Almost nobody else, and they're incredibly efficient. Almost nobody can compete with what they're doing, because they're so gigantic and so big and have so much pricing power and so on and so forth. Again, monopoly that needs to be broken up, or great business, you decide. But the bottom line is they've got 600 billion in sales, which is 10% of all retail sales are Walmart. And all they have to do is charge 1.3% more, which is $8 billion basically. And actually it's 1.6% more. So 1.6% more. So they charge 1.6% more, and then they're even. Then there's $8 billion more coming in, and they're going to pay $8 billion more to laborers, and they'll be okay. All companies should be doing this. This is stupid not to do, because what you're doing is you're raising the salary of the Walmart employees from 12, which is their average now, to 14. So that is almost a 20% increase in salary. And now, assuming, obviously, I mean, where the hell is they going to go to the dollar store? But assuming they're Walmart customers as well, that means they make 20% more money, and the cost of the stuff they buy goes up let's say 2%. That's a great trade-off. All companies should be doing this. But again, capitalism, greed, broken system. If you want to fight inflation, you don't fight inflation by keeping the wages down, which is what the Fed is trying to do. They're trying to keep the wages down. That's not how you fight inflation. You fight inflation by fixing the wages and then adjusting prices, and then you're done. You find the equilibrium at which you're done. But the reason we're having inflation is because we had artificially low prices. We had artificially low interest rates, and we had artificially low labor rates, and they were unsustainable. And those artificially low labor rates and interest rates led to artificially low material prices. And the supply chain was cheaper because of artificially low labor rates and artificially low interest rates. It made it cheaper to produce copper. It made it cheaper to produce iron, gold, whatever. It made it cheaper to produce parts that go into cars and so on and so forth. That all starts breaking down because again, capitalism, because the companies started they said, oh, this is all going great. Let's raise prices, because we make more and more and more profit by raising the prices, and let's not give the workers any raises to compensate them at all, until the gap between the profits made by the top 1%, which is now at a historical high, versus the money paid to the labor becomes so large that the labor can't take it anymore, and this started back in when was Occupy Wall Street? Was that 2009? Was that 2007, 2008, right? So Occupy Wall Street was the first inkling of that. And when I wrote my 2010 outlook, I predicted all of this shit would happen. In 2010, I said, this has gone too far, this is too much. you're going to have a settling with labor that's going to disrupt the global economy, blah, 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 blah. I talked about all this shit. So it's exactly what was going to happen, and it did happen, and it's happening now. We're in the middle of it. We're not at the end of it. We're at the beginning of it, because labor is still drastically underpaid. And we are going to be going through a couple of years of pain before we straighten things out, because there's no leadership addressing the problem. There's nobody getting up there. Even Joe Biden, who you would think would, but even Joe Biden is not just getting on TV. You know, Obama used to do these fireside chats. I wish Biden would do it. Although Obama, of course, is incredibly articulate and brilliant and so on and so forth, so it wouldn't come off as good. But Obama used to do his like fireside chats, his radio addresses on a weekly basis, and he would talk about all kinds of things and explain his logic for stuff and talk about the problems he sees and what we need to do as a nation to fix it. And you would listen to this guy and you'd be like, yeah, okay, good, yes, good. Someone understands this. And he actually would do stuff try to do stuff. And he did. He did Obamacare is an example of that. No matter how hard they fought him, he still got it through. You got to take problems and fix them and address them. Biden or anybody, for God's sakes, needs to get up and put some charts up and talk to people and explain to them, this is what's going on, this is how we fix it. Because if you don't do that, it's just this chaos nonsense where this state's raising minimum wage, this state's not raising minimum wage, this one's doing this one has that rule, this one has that rule, and this company is raising price, giving employees a raise, and this one isn't. And the companies are worried about being anti-competitive because now they've got to raise their wages and the other one didn't raise their wages, and now they're making more money and people are buying their stock and blah, blah, blah. It's all nonsense. That's why minimum wage is good, because the minimum wage excuses the companies and makes sure everybody's on a level playing field. That's why a minimum wage is good. The government says this is the least you should pay a human being to have some dignity in their lives when they work a full week and they can go home and afford to turn on the lights in an apartment and have some food and watch TV without being in debt up to their eyeballs, where they have some hope maybe of retiring one day, with other than dropping dead at their jobs. These quaint little concepts that we completely have blown off in capitalism. So somebody needs to talk about this and address it and explain it and say, this is what you need to do. And you need to get the people on your side so that when these guys go on, the far right people go on TV and they start spouting off nonsense, that people know it's nonsense and they understand why it's nonsense. We do not, and I've said this forever, we do not educate our children financially at all. We do not teach economics other than very superficially in schools. We don't teach basic life functions. People sign, again, student loans. People take out these student loans. They don't understand what a loan is and how it works and what repayment terms are and how it's going to affect their lives. They've never been taught this stuff. They haven't even gone to college yet, and we're hitting them with student loans and having them sign these onerous bank forms and things like that. That's nuts. We're giving 18-year-olds credit cards too. When you go to college, the first thing they do is give you 100 pieces of mail. Like, here, sign up for this, sign up for that. Here's money, free money, cash. Get all these bonus rates for your credit card. They just suck you in and try to get you in debt before you even start your life. So messed up. But I'm saying someone needs to explain this to people and somebody needs to do something about it. We need to have a plan. We have none of those things. And we're so deep in the crisis that it just seems almost like there's no point anymore, but that's not the right attitude. I know he says, I noted the Fed balance sheet every time it falls slightly within a few months, they are forced to increase it. Yeah, because anytime something goes wrong, like anytime there's an auction that goes off and the rate was, look, the second the rate goes too high for the Fed, they buy it, they start buying it. They're sitting at these auctions too. So they tell you they're going to taper off, but they don't really taper off. They still have to sit at the auction, and God forbid people don't want to buy notes at these stupid low rates. They've got to take them, and they got to take them before anybody notices the auction's getting out of control. Also, and again, there's always going to be a Sealy that goes out of business or something like that, or CERTA or whatever they are. There's always going to be a mattress store. Now, you imagine how many Serta stores there are in the world, how many of these mattress places there are, and this mattress company goes out of business, and the inventory and so on and so forth, and how many banks are getting slammed by this thing. They go bankrupt. They're defaulting on billions and billions in debt. The Fed's going to take it. So now the Fed is going to own $1 billion worth of mattresses or of mattress inventory. That'll be there. That goes on their balance sheet. Hey, we've got $2 billion worth of mattresses, and we wrote a $2 billion check to the bank to say, here you go. That's for the mattresses you insured or loaned against. It's how the whole scam works. But it's nuts, and it's nuts to the point where Japan is now owns 120% of the mattresses. That makes no sense. Like they've lent out more money or put out more money or claim more of an asset than there is actually product. That means it's just a complete fantasy. And the Bank of Japan and the Bank of Japan is 10% something over the actual asset value. That would be like our Fed having $1 trillion of completely fake assets on their books. It's nuts. It's everything is just crazy. Anyway. All right. RN says Steven still has hundreds of millions in debt and a line of credit with PNC. I will take your word for it, but what the frick? How is that possible? Where is this money going? I'm saying this is what Congress needs to investigate, though. I want to know. You know, you have no right as a parent or a student at Stevens to find any of this stuff out. Because I've actually asked. I've asked if they have books or anything like that. It's like you know they're just they're a private institution. You don't have any rights to them. I don't know what they're doing. Where does the money go? What could they possibly be spending it on? How much debt could they possibly have? What do they refinance the dot-com bubble or something? I don't know what that's about. And JC says, any thoughts on UNG? Or at this point, are we just toughing it out? We are just toughing it out at the moment. Yeah, I think it's tough. It is tough to tough it out. Where are we? UNG. So here's natural gas since 2018. Pretty clearly, and we've gone below, but pretty clearly, $3 has been a reasonable line. For a while, it was $2. It was $2 because of the explosion in the shale and the fracking and the this and that, and they started producing a lot more. But they were producing a lot more in anticipation of LNG exports. Okay, so LNG exports means, because usually what happened before is when you have natural gas and you can't export it, right? You can't go out of the country with it because there is no way to put it on a ship profitably. But LNG compresses the gas 600 times. So now it's like putting out 600 ships. It's equivalently profitable to ship natural gas as it is to ship oil. And that's a game changer, right? That means that now we can sell our oil to China or Japan or Europe or whatever. They'll buy our gas too. So that's great. But what happened recently is a major natural gas export terminal had a problem and was shut down for like the last month or so. And that stopped the exports. Now, if you stop the exports, you have nowhere to put the gas. There's no alternate place to put it, and we don't have enough export terminals to pick up the slack. So therefore, it's wasted basically. The gas floods the inventories, and it becomes cheaper and cheaper and cheaper because they're desperately trying to get somebody to take the gas at any price. And by the way, if you're in, I think it's called Marcellus Shale up in Pennsylvania, or Utica Shale around there, if you're in natural gas, it costs $1 to produce natural gas out of a well. After you build the well, you're gonna spend $20 million, $15 million, $20 million putting the well together, including leasing the land and so on and so forth. So you're going to put 20, 15, $20 million up front into the well, but then after that, you're going to sell it. You buy, then your gas is being produced at $1 per I forgot what they call it, billion cubic feet. No, yeah, I think it is BTF, billion, whatever. Anyway, $1 per unit, and British thermal units, BTU. That's what it is, BTU, British thermal units. So it's so you're producing it for $1. The gas comes out of the well, and then you're shipping it for a very minor amount of money, 10 cents, whatever, and you're selling it for the price that's on the chart there, roughly. Then it gets shipped overseas where the markets are more expensive, generally, because they don't have natural gas. We're the Saudi Arabia of natural gas. We have all natural gas. But here's what's happening. We are the Saudi Arabia of natural gas, but we're not OPEC. So what happens is there's always a push-pull of supply demand. So a lot of people start drilling, and then they open up more LNG terminals, and a lot more people start drilling, and then more LNG comes up. So there's always a little periods where it'll go down and go up. It'll spike up because there's not enough drilling. Then it'll go down because there's too much drilling, then not enough drilling, and so on and so forth. And that depends on when these massive terminals come online. And also the customers have to build terminals on the other side to receive it. Otherwise, what's the point? You have to be able to decompress the natural gas once we send it over. So there have to be terminals on our side and terminals on the customer side. But once our customers, which is generally like right now, Europe and China and Europe, China, Japan, once our customers start building these terminals, all of a sudden somebody in Africa goes, wait a minute, they've already got a terminal to receive natural gas. We've got a ton of natural gas that's been trapped in Nigeria since the dawn of time, and nobody's touching it. So all of a sudden, somebody builds an LNG terminal in Nigeria, and all of a sudden, if there's 10 LNG terminals for export in America, and you build one in Nigeria, you've just devalued the LNG in America by 10%. Because Africa, again, because of the compression issue, until the LNG was possible, there was no viable way to get the gas from Africa to Asia, so no one ever bothered doing it. But now, everywhere where they have natural gas that's been landlocked forever is now reevaluating the gas. Now, Russia was touching the land of Europe and touching and close enough to Asia with short shipping. They have a huge pipeline network to deliver their natural gas. They just basically put it in a pipe wherever they get it, and then they send it by the pipeline to whoever wants it, even 1,000 miles away or whatever. They can ship their natural gas by pipeline. That's what's gotten cut off. So we've increased the supply of natural gas considerably. Russia has shut off their natural gas supplies to Europe, but when they put that back on, and again, you're flooding the market with more natural gas. So speculation comes depending on the situation in the war and what they think is going to happen, and whether or not Russia will open up their natural gas, and whether or not Nigeria puts a terminal online. These are the things driving the market, and that's what's been sending natural gas up and down $1 and crazy moves. I mean, if you look at this, is 5 years. This is 2017. Here's 2020, 21 and a half, and generally it's in a $1 range, like almost entirely in a $1 range, and hardly ever more than 50 cents in a month or two, right? Just here's a big spike here for whatever reason, not really moving more than 50 cents up and down. Suddenly, though, these are months, or not, no, I'm sorry, these are quarters. So suddenly, you know, this is $2, this is down $2, this is up $2, this is up another couple of bucks, this is down $3, this is up $3. These are insane moves. Compared to this is complete madness. And so now things have coalesced, and there are people betting the war is going to end. There are people betting Africa's supply is going to come online. There are people betting that the terminals are going to reopen in the U.S. and so on and so forth. Well, in the U.S., it's actually better for the U.S. prices if the terminals reopen because we're sending more out of the country. But they have been closed. We have a huge supply of inventory. and we aren't able to get rid of it right now. It's going to take a while for us to burn off and ship out our excess inventory because we don't have enough terminals to do it. And even if we did, then you run into the problem of how many other countries are starting to produce natural gas in the global market and drive prices down. And what if it's a mild winter and so on and so forth? A lot of factors. All right, but generally, this is not at $3, it's not profitable for me because of the upfront cost of the well. I got to spend $15 million putting a well together. And let's say I'm going to be able to ship out, let's say I'll ship out 10 million units from a well over the course of the well. Now that's over 5 years. So I expect to make, if I don't get, it's going to cost me $20 million to build the well. So it's going to take me 10 years at $3 just to get my money back. Okay, so when you hit $3, it's no longer, there's no point to me putting up a new well. I'm not going to increase the supply of natural gas anymore. I'm not going to play this game. So once you get back to this point, then the well production starts shutting down, and then the supply starts drying up, and so on and so forth. And natural gas wells deplete very, very quickly. Also, they start off at max production, and then they're down 50% after the first year, another 50% after the second year. So now, and then they'll sort of dribble out at 25% production in subsequent years. But most of your big production comes in the first 2 years of a natural gas well, and it still drops off rapidly, like 5% a month, like less production every single month. So when you're investing in natural gas, you do have to look at the short-term gain and say, geez, I can't be sure this is going to be above 3. And if it's not above 3, I'm wasting this money. And not just wasting the money, but the opportunity cost, right? Because if I can put it in a money market fund for 5%, I could have made in 5 years or in 10 years, I could have made 50% of my money. I'm going to make 0. There's no reason that you would do that. It doesn't make any sense. So even people who are bullish on natural gas and like natural gas investing are not running to put up new wells right now. And once you get below 3, it's a loser. Not only is it a loser, but then the people who did invest in wells at these prices and perhaps paid too much for the land, or made deals that were made unattractive deals, or borrowed from banks. Again, we go back to the banks. They may have taken out loans that they cannot repay at this level. All of a sudden, then existing wells start foreclosing. And now it becomes cheaper for new people to come in, and instead of buying all new equipment and doing all the drilling, they take over existing wells, but that doesn't add to supply. That means the fresh money that comes into the business goes to just purchasing back existing wells from the bank and so on and so forth, instead of actually creating new production. And that's when the production, the supply of natural gas starts rapidly depleting. But this is all over a year or so. It's not quick. So you do have to stick it out, and you do have to be ready, but eventually we should get a curve back up. I think 450 is where we're going to settle out eventually, but eventually could be the fall. So that means that the plan now is just to eat the loss and hang on and wait. So that's what we're doing now. I think I have 4 contracts at the moment. Oh, look at that, $6,000 loss. It's awful. So yeah, 4 contracts are down $6,000 at the moment at 287. And those are rolled over from last month, so they're a good $10,000 down, including last month's losses as well. So not going good at all at the moment, but I don't think it's going to be the catastrophe that it looks like right now. Oh, all right, good. I'm out of voice, but fortunately we seem to be out of questions. So I hope that was informative for everybody, and we will do it again next week with a lot more earnings and the Fed. Oh my God, we got the Fed next week. Wow. All right, well, tune in for that. I'm gonna show up for that. That seems interesting. All right, take care, everybody. Have a great week.